So, you're thinking of moving to the South Carolina Lowcountry for your retirement, and you want to know, what are my financing options? Well, that's exactly what we're going to talk about today. I'm bringing in a local expert to talk to you about an option to buy more house than you ever thought you could, and possibly never make another mortgage payment again. Okay, so if you want to hear more about this and you're thinking about retiring in the South Carolina Lowcountry, don't go anywhere. Let's get started right now. Do you want to know everything there is to know about the South Carolina Lowcountry, whether it's Bluffton, Beaufort, Hilton Head Island, or Jasper County? Then subscribe below and tap that bell for notifications so you'll be the first to know about the current market in the South Carolina Lowcountry. My name is David Simcox, host of Lowcountry Lifestyles and a local realtor. I get calls and emails every day from people just like you and you and you and you looking to make their move to the South Carolina Lowcountry, and I absolutely love it. So whether you're moving in 3 days or 3 months, give me a call, shoot me a text, send me an email, or book a Zoom call so I can help you find your Lowcountry lifestyle. In today's video, we're going to be talking about retirement, and specifically funding your retirement home here in the South Carolina Lowcountry. So I'm going to bring in a local expert that I work with who's also a very good friend of mine, and he's going to talk about a very unique product called a Hecm, which allows you to purchase more home than you ever thought you could, and also never make another mortgage payment ever again. So without further ado, let's get into it. All right, guys, I am here today with one of my good friends, Mr. Brian Bannon. Thank you for being on the channel today, Brian. And the reason I had Brian on the show today is we have a lot of people moving to the South Carolina Lowcountry and wanting to retire in Bluffton or Hilton Head or Beaufort or Jasper County. And they want to know, like, what are their financing options? And, you know, that's exactly what we're going to talk about with Brian, because Brian is actually a lending specialist in the area that specializes specifically in retirees and specifically in a product called Hecm. So Brian, thank you for being on the show. And what the heck is a Hecm?
So the Hecm is it's an acronym, and the terminology for it is home equity conversion mortgage. It is a mortgage that allows people that are 62 or older, in this case, to purchase a home with a cash infusion and not have to make mortgage payments afterwards.
So if you're 62 and you put a certain amount of money down, never ever making another mortgage payment ever again.
That's right. So
wow.
You can do this with as little as a 30 to 50% down payment and not have to make a mortgage payment. So you can purchase a house with a 30 to 50% down payment, never have to make a mortgage payment.
Wow. So if somebody's looking to move to Sun City or Latitude Margaritaville or Carolina Oaks or Four Seasons at Carolina Oaks or any of these other active adult communities, if they're trying to get into like a $500,000 house, potentially they could get in for 150, 200,000?
A couple $100,000. So the math changes with the interest rates and people's ages, but typically it's for as little as 30 to 50% down.
And you have to be 62.
You have to be at least 62 years old.
Okay, so that answers the question, who is eligible? Anyone over 62. Are there other qualifications?
No, not really. The financial assessment it's relaxed. You still have to go through financial assessment because it is a loan.
So basically, if somebody is looking to get into the property, do they have to have a certain amount of income in order to qualify for this program?
No, the income requirements require them to be able to pay taxes and insurance while they live in the home. Those are their income requirements. And they have to be able to pay any property owner association fees, or they've got to be able to maintain the home. So those are the requirements for the loan.
Okay. And is this only for a primary home, or can you do this on a secondary home?
Yeah, this is for primary homes only. So primary home is considered the home that the purchaser lives in 6 months plus 1 day out of the year.
Okay. And so give me some examples of like strategies that you've seen people use this type of loan for.
Sure. So for example, you've got somebody who is looking to purchase a $750,000 home and they don't want a mortgage payment. They can purchase that home for as little or less than $400,000.
Okay.
With a cash payment down, $400,000, they walk away, don't have a mortgage payment.
Wow. And so I know one of the things that you told me is that a lot of times people can buy more house than they thought they could. Yeah. So people typically go and get pre-qualified for a loan, or they have cash, a certain amount of cash, and they think they either have to pay cash for a house if they want to go that route, or they have to qualify for a loan, and then they're making these monthly mortgage payments while they should be out playing pickleball. So how does that work exactly? I mean, how do they actually buy more house than what they thought they could potentially qualify for?
Well, the way the loan is structured is that based on the interest rates and the age of the buyers, they have a minimum amount. There's a minimum down payment that they need to make, and at that point, they're free and clear. It is mortgage payment optional. They do not have to make mortgage payments. They're on title. They own the home. So, you know,
If someone does this, I mean, they can still leave the property to their heirs, and I mean, everything's the same as if they paid cash or if they put a traditional mortgage on it?
Sure, absolutely. So it's a traditional mortgage. The buyer is on title. The bank does not own the home. So it's like a traditional mortgage in that, except you don't have a mandatory monthly mortgage payment you have to make. So the lender has to be a little bit more patient about when the loan gets paid off. The loan gets paid off when the buyer of the home either decides to move, refinance, or both buyers pass away, in which case the heirs would get the home.
What kind of properties qualify for this type of loan?
So yeah, 1 to 4 unit dwellings, properties, townhomes, condos, and planned unit development homes. And actually we've got double wide manufactured homes built after 1976 also qualify.
Okay. So if someone had the cash to buy a property, should they still consider using this financial product?
Oh, absolutely. You know, the one thing about homes, we all know, is that they typically appreciate, right? So every decade, homes appreciate. But the bad thing about homes is that you're either making a mortgage payment or you're putting cash into the home when you buy it. And the only way to get it, typically, especially in retirement, is to sell it. So if you could purchase a $700,000 home and only had to put down $400,000 or $500,000, that would leave you that extra money do something else with. They could reinvest it, they could purchase another property, they could buy annuities, they could buy long-term care, the list goes on and on. So yeah, absolutely, because it keeps people cash liquid in retirement.
Okay, and I believe you told me this is actually some kind of like government-backed product. Is that right? So how does that tie in?
Yeah, this is actually an FHA loan. The program is run by HUD. It's insured through FHA. It is a non-recourse loan, which means that when you sell your home, you can never owe more than the home appraises for. You know, it's insured by the federal government, and it's been vetted. They've been out for a number of years now.
Okay. So you can, it's called a Hecm, right? H-E-C-M?
H-E-C-M, Home Equity Conversion Mortgage for Purchase.
So you can do it when you purchase a new home.
That's right.
If someone already owns a home outright, can they refi and do a Hecm?
They actually could. They could refi into a Hecm. Typically when people refi, they're looking to do two things. Number one, they're looking to eliminate their monthly mortgage payment, or number two, they're looking to open up a line of credit.
Okay, so it frees up some cash basically.
That's right.
And then what about, I think that's all the questions I have. Just give me like maybe 4 bullet points, key takeaway. If someone's considering a Hecm, What do they need to know? Top 4 things.
So you got to be 62 years old.
Yep.
Typically, your minimum down payment to do a Hecm for purchase is going to be 30 to 50% down.
And then never make a payment.
And then never have to make a payment. The loan is extremely flexible. Okay, so it's going to allow you to do a lot of different things. If you want to buy a $600,000 home, you want to put $500,000 down on it, you can. If you want to put less, you can. If you want to put more, you can. It increases purchasing capacity. That's the biggest takeaway with the home equity conversion for mortgage purchase program.
Meaning you can buy a more expensive home.
Sure. If somebody's looking at, they've got $500,000 cash from a house that they've sold or about to sell, and the house they're looking at here in the Hilton Head or Bluffton or Beaufort area, Savannah, is $600,000 with upgrades. They don't need to stress about that. They don't need to worry about taking on a mortgage payment. They can purchase the house, put down less than $500,000 and still get in their $600,000 dream home.
So if they had $500,000 cash, could they buy an $800,000 or $900,000 as well with this product?
Potentially. It's 30 to 50% down payment. So yeah, but potentially. I mean, the minimum number is going to be 30, but typically it's 30 to 50% down payment.
Wow. Okay. So most important question, if people are thinking of moving here from New York, New Jersey, Ohio, Pennsylvania, California, how do they get in touch with you? Do you want to give them your phone number?
Sure. You can reach me. My cell phone number is 843-860-1291.
Okay. And I've known Brian here for about 10 years, and I trust him. We're also very good friends outside of doing business together. We also do business together. So I personally vouch for this guy. He is a good guy. He's an honest guy. I've done business with him, and we're also really good friends. So Brian, thank you very much for teaching us a little bit about the Hecm.
You bet.
And you guys reach out to Brian. He's a great resource. All right, guys, thank you for staying till the very end of the video. I hope you enjoyed learning a little bit more about this retirement financing option. As always, my name is David Simcox, host of Low Country Lifestyles and a local realtor. If I can help you find your low country lifestyle, give me a call, shoot me a text, send me an email, or book a Zoom call, all in the description below. And please don't forget to like, subscribe, and tap that bell for notifications so you'll be the first to know about the current market in the South Carolina Low Country. Thank you for spending time with me, and as always, it's been a pleasure.